Welcome back to the channel. And today I want to dive into something that I think a lot of people have been thinking about, especially if you've been following the crypto market closely, and more specifically, if you've been watching ADA and feeling a bit confused or even disappointed about how it has performed during this market cycle. Because recently I came across a comment from a viewer that really stood out to me and made me want to sit down and properly talk about this topic in detail. And I know for a fact that this isn't just one person's opinion, but something a large number of people in the community are feeling right now. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. The views and opinions expressed in this video are based on personal analysis and are not guarantees of future performance. Cryptocurrency markets are highly volatile and involve significant risk, so you should always do your own research and consult with a qualified financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or gains that may occur as a result of actions taken based on this video. Always invest responsibly and only risk what you can afford to lose. Which is that despite all the major developments, announcements, and progress happening around Cardano and ADA, the price action hasn't lived up to expectations, and that disconnect between fundamentals and performance has left many investors scratching their heads and wondering what exactly is going on. So what I want to do in this video is take a step back, zoom out a little bit, and look at the bigger picture. Because sometimes when you're too focused on one asset or one ecosystem, you can end up stuck in what I like to call an echo chamber, where everything seems isolated and disconnected from the rest of the market. But the truth is that crypto doesn't work like that. Everything is connected. Everything moves in cycles. And if you really want to understand what's happening with ADA, you need to understand what's happening with the entire altcoin market as a whole. So before we go any further, if you're new here or you haven't already, make sure you show some support for the channel by subscribing and turning on notifications so you don't miss any future updates. Because I'm constantly breaking down this kind of information in a way that actually helps you understand what's going on instead of just reacting emotionally to price movements. And with that said, let's get into it. Now, I think it's fair to say that this cycle's performance for ADA has been underwhelming compared to what many people were expecting. A lot of investors were looking for new all-time highs, significant price expansion, and a level of excitement similar to previous bull runs. But that just didn't happen. And naturally, people started looking for reasons. Some blamed the lack of a dominant stablecoin in the ecosystem. Others pointed to concerns about network performance or adoption speed, and some simply followed the broader narrative that ADA was somehow falling behind. But here's where things start to get misunderstood, because when you actually analyze the situation objectively, you begin to realize that this isn't really an ADA-specific issue at all. In fact, what we've been experiencing is not an isolated downturn for one asset, but rather a prolonged altcoin bear market that has been ongoing since the peak of the last major cycle. And that's a crucial distinction that a lot of people are missing, because if you believe that ADA alone has been underperforming while everything else is thriving, then of course you're going to come to the conclusion something is fundamentally wrong with it. But when you step outside of that narrow perspective and start looking at other major projects across the space, a very different picture begins to emerge. For example, you can look at well-established projects that have had massive integrations, strong development activity, and significant real-world use cases. And yet, despite all of that, they also failed to reach new all-time highs during this cycle, which immediately tells you that this is not about one project failing while others succeed, but rather about the overall conditions of the market limiting growth across the board. And this is where it becomes important to understand the concept of market cycles and capital flow. Because markets don't just move based on news or individual project developments. They move based on liquidity, user growth, and the distribution of capital across different assets. And one of the key indicators that highlights what's been happening is the lack of a true altcoin expansion phase during this cycle. Typically, in a strong bull market, you would expect to see new users entering the space in large numbers, bringing fresh capital with them, which then flows from major assets into smaller altcoins, creating that explosive growth that people associate with alt season, but that didn't really happen this time. Instead, what we saw was a market largely driven by existing participants recycling the same capital, which significantly limited the upside potential for many altcoins, including ADA. And this ties directly into another important factor, which is adoption. Because if you look back at the timeline, adoption growth essentially flattened around 2022. And without a steady influx of new users, the market simply didn't have the fuel needed to push altcoins to new highs. And this is why it felt like something was missing throughout this cycle. There was no widespread euphoria, no massive wave of newcomers, and no sustained altcoin rally. And as a result, many assets remained stuck below their previous peaks. Now, another layer to this analysis involves looking at how capital is distributed within the crypto market. And historically, what we've seen is that during bear markets, capital tends to concentrate heavily in the top assets, and then as the market transitions into a bull phase, that capital gradually spreads out into smaller projects as investors search for higher returns. But what's interesting about this cycle is that the concentration of capital in top assets has remained unusually high, even during periods where you would normally expect it to decrease, which suggests that investors are being more cautious and selective, preferring to keep their funds in established projects rather than taking risks on smaller or less proven ones. And this shift in behavior points to a more mature market overall, where participants are not just chasing hype, but are starting to pay closer attention to fundamentals, utility, and long-term potential. And while that might slow down explosive gains in the short term, it actually creates a stronger foundation for sustainable growth in the future. And this is where things start to become more interesting for ADA specifically, because despite the lack of price excitement, there have been significant developments happening behind the scenes, from ecosystem growth to new integrations and increasing utility. And these are the kinds of factors that tend to matter more as the market matures, because eventually capital begins to flow toward projects that demonstrate real value rather than just speculative appeal. And this is often the phase where patient investors are rewarded, because they recognize that price doesn't always immediately reflect progress, especially in a market environment that is still recovering from a prolonged period of limited growth. And another important point to consider is that not reaching an all-time high in one cycle does not mean an asset is incapable of doing so in the future. There are multiple examples in the crypto space of projects that took longer to break out, but eventually went on to achieve significant gains once the right conditions were in place. And this reinforces the idea that timing and market structure play a huge role in determining outcomes, sometimes more so than the individual qualities of a project itself. And this is why it's so important not to fall into the trap of making quick judgments based solely on recent performance, because doing so can cause you to overlook the broader context and the underlying trends that are actually shaping the market. And unfortunately, this is exactly what happens when people stay inside that echo chamber I mentioned earlier. They focus only on one asset, compare it to unrealistic expectations, and ignore the fact that many other projects are experiencing similar patterns, which leads to conclusions that don't accurately reflect reality. But when you step back and view the market as a whole, it becomes clear that we are all essentially in the same environment, influenced by the same macro conditions, and moving through the same cycle together. And if you want a simple way to visualize it, think of the crypto market not as isolated islands, but as a connected system where everything is affected by the same tides. Sometimes those tides lift everything, and sometimes they hold everything back. And right now, we've been in a phase where the tide hasn't fully come in yet for altcoins, but that doesn't mean it won't, because cycles are a fundamental part of how this market operates. And history has shown that periods of stagnation are often followed by periods of rapid growth, especially once adoption begins to pick up again and new capital starts entering the space. And there are already signs that some of these conditions are beginning to shift, which could set the stage for a more favorable environment moving forward. But even with that in mind, it's important to remain realistic and understand that these transitions don't happen overnight. They take time and they require patience, which is something that has been particularly challenging for many people during this cycle because it hasn't delivered the kind of excitement and momentum that previous cycles did. But in many ways, that's exactly what makes it so important, because it separates short-term speculation from long-term conviction. And it forces investors to think more critically about where they are putting their money and why. And for those who are willing to take that approach, this period can actually be an opportunity rather than a disappointment, because it allows you to position yourself ahead of the next phase of growth instead of chasing it after it has already begun. So to wrap everything up, the key takeaway here is that ADA's performance should not be viewed in isolation. It is part of a much larger market dynamic that has affected a wide range of altcoins. And the lack of new all-time highs is not a sign of failure, but rather a reflection of the conditions we've been operating in, conditions that have limited expansion, slowed adoption, and kept capital concentrated at the top. But at the same time, those conditions are evolving, and as they do, the opportunities for growth will evolve with them. So instead of focusing solely on what didn't happen in this cycle, it's more productive to look at what is being built, what is changing, and what could happen next as the market continues to develop. And with that said, I'd love to hear your thoughts on this. Do you think ADA has been unfairly judged this cycle, or do you believe there are deeper issues at play? Drop your opinion in the comments below. And if you found this breakdown helpful, make sure you like the video, subscribe to the channel, and I'll see you in the next one.